Welcome to the Explainer. When we think of utility stocks, explosive growth isn't exactly the first phrase that comes to mind, right? We usually think of them as these slow, steady, maybe even kind of boring income generators. But Black Hills Corporation is doing something totally different right now with what we call a barbell investment strategy. On one end of the barbell, you have incredible historical stability. And on the exact opposite end, you have an absolute explosion of tech-adjacent growth. It's a really unique combination for your portfolio, and we're going to unpack exactly how they're pulling it off. Just to give you an idea of the scale we're dealing with here, Black Hills is definitely not some tiny regional player. They actually serve 1.37 million natural gas and electric utility customers spread across 8 different states out in the Midwest and Mountain West. So they have this absolutely massive physical infrastructure foundation already in place. Okay, let's dive into this. Here is our roadmap for the Explainer today. First, the BKH investment thesis. Second, 56 years of dividends. Third, the data center catalyst. And fourth, merging for the future.
Section 1. The BKH investment thesis. Looking at the utility baseline.
To really grasp the explosive growth that's coming, we've got to first look at the bedrock stability of their regulated utility business. Think of this as the heavy, ultra-stable weight on one side of our barbell. Take the incredibly warm winter of 2026, for example. That weather hit their earnings by 18 cents per share. But management didn't panic at all. They proactively offset that hit with 24 cents per share from new rates and rider recovery. And they actually managed to cut operating and maintenance expenses by 10 cents. The result? They totally reaffirmed their adjusted EPS guidance of $4.25 to $4.45. They clearly know how to manage their baseline no matter what the weather does.
Moving on to Section 2. 56 years of dividends, the income side of the barbell.
And that rock-solid operational management leads us to the ultimate proof of their stability. Just look at this number, 56. Black Hills Corporation has increased its dividend for 56 consecutive years. Let that really sink in for a second. We're talking through recessions, major inflation spikes, energy crises, wild weather changes. They've reliably raised that payout year after year. That is literally the second longest track record of consecutive dividend increases in the entire electric and natural gas industry. If you're an investor hunting for reliable income, it really doesn't get more foundational than that. And this brilliantly illustrates exactly why that dividend is so incredibly safe. Black Hills targets a payout ratio of 55 to 65% of their earnings. By distributing roughly 60% of their profits as dividends and keeping the other 40% to reinvest right back into the business, they make sure the dividend is highly sustainable. For you as an investor, this perfectly balanced capital allocation means you aren't sacrificing the future growth of the company just to get your quarterly check. It's a formula that has worked for over half a century. So, we've firmly established the safety and stability side of the Black Hills barbell. But look, slow and steady income is only half the story here. The real excitement buzzing around this utility right now is driven by unprecedented demand. So the big question is, where is all this explosive growth actually coming from? That brings us to Section 3, the data center catalyst and hyperscale computing. The short answer to that explosive growth? Hyperscale computing. We are headfirst into the era of artificial intelligence, and AI requires an absolutely immense amount of electricity. Who knew a supposedly boring Midwestern utility would end up powering the AI revolution, right? Just look at the stark contrast. Their current 5-year financial plan comfortably accounts for 600 megawatts of data center load by 2030, driven by heavyweights like Microsoft and Meta. But that's just the baseline. Their upside pipeline, meeting demand currently under active negotiation and locked behind non-disclosure agreements, is an astronomical 2.5 gigawatts. To put that into perspective, 1.21 gigawatts powers a DeLorean time machine, so we're talking double that, all from a single utility. And the undisputed crown jewel of that pipeline is a massive 1.8 gigawatt project proposed for Cheyenne, Wyoming. Now, if you follow the industry news closely, you might know there was a recent change in development partners for that massive Cheyenne project. But CEO Lynn Evans stepped right in to clear the air, stating, "The 1.8 gigawatt project has not been paused and continues to represent a significant opportunity. Our efforts remain fully directed toward successfully delivering the project." Bottom line, the company is still tracking for this massive facility to begin service in early 2028. The crown jewel is absolutely still in play. And if you want concrete proof that this project is charging forward, Just look at this staggering figure, $201 million. We're not talking about projected, maybe someday revenue here. This is hard cash that has already been deposited by the prospective data center customer to secure long lead generation equipment. So the absolutely crucial point here is how this money is structured. It's called a CAIC, or Contribution in Aid of Construction. Basically, the tech company is directly funding the upfront capital needed to reserve these massive transformers and gas engines for their data center. This is a brilliant financial mechanism because it proves the customer is dead serious while completely shielding Black Hill's balance sheet. And most importantly, it protects everyday Wyoming ratepayers from having to shoulder the financial risk of building out all this hyperscaler infrastructure.
And keep in mind, it's not just one mega project. Their tech footprint is deepening super fast across the entire territory. Meta's new AI data center in Cheyenne is actually transitioning to permanent service and ramping up later this year. Plus, Microsoft, who Black Hills has already served for over a decade, just announced they intend to acquire another 3,200 acres in Cheyenne for even more expansion. Because of all this literal boots-on-the-ground activity, they're projecting this single sector will contribute more than 10% of their total consolidated earnings per share by 2028. It's just massive.
Which leads us to our final part, Section 4, Merging for the Future, looking at scale and risk management. Look, handling 56 years of steady dividends while simultaneously building infrastructure for the world's biggest tech companies requires some incredibly rigorous risk management. Before you can play high-growth offense, you've got to have a solid defense to neutralize baseline threats. To tackle aging infrastructure, they've laid out a $4.7 billion 5-year capital plan. This includes building the advanced 99-megawatt Langemay 2 generation plant in South Dakota. To mitigate the always-present threat of wildfires, they've proactively taken 37% of their distribution lines in high-risk areas and moved them underground. And to handle extreme weather, they're actively working with regulators to secure advanced rate riders and 5-year system safety recovery trackers. They are seriously locking down the downside risk.
Let's move to and see how this all builds toward their ultimate strategic endgame. Black Hills Corporation is currently in the process of an all-stock merger with Northwestern Energy. They already have shareholder approval in the bag. Looking ahead, they expect their Wyoming wildfire mitigation plan to be approved in Q2 of 2026, a decision from the Federal Energy Regulatory Commission by mid-2026, and the official closing of the merger in the second half of that year. Once the ink is dry, they'll form a brand new entity, Bright Horizon Energy Corporation. This is going to create a premier regional powerhouse spanning 8 states, giving them the combined scale they really need to fund and manage this explosive AI-driven energy boom. Utilities are no longer just about keeping the lights on anymore. They are rapidly transforming into the indispensable physical backbone of the global AI revolution. By perfectly balancing a legendary 56-year dividend track record with literally gigawatts of actively negotiating tech sector growth, Black Hills is writing a completely new playbook. So, as they merge to become Bright Horizon Energy, it leaves us with one critical question to think about. Is this unique blend of absolute safety and massive hyperscaler upside the ultimate barbell investment for your portfolio? Thanks so much for joining us for this explainer, and we'll catch you next time.